It's great to be here with Michael Shaulov, the co-founder and CEO of Fireblocks. My name is Chris. I'm a partner at Han Ventures. We're a crypto-focused venture firm, and we're excited to be investors in Fireblocks. And so it's a real pleasure for me to be here with Michael today. I'm sure many of you will have already heard of Fireblocks, but for those of you that have not yet, Michael, maybe we can start with just a little bit of what does Fireblocks do? Who are your customers, and how did you come to start the company?
Sounds good. Chris, great to be here. Thanks for the partnership and all the support. So Fireblocks, we provide infrastructure for companies in the crypto space. We basically address a few requirements or needs or basic needs that people have. The first and foremost is the need to safeguard the assets, essentially what people call in this space custody or wallet technology. So we provide that to institutional investors, to fintech companies, to payment service providers, and Web3 companies in general. So that's kind of the first thing. The second thing that we help them with is the ability to move assets across the ecosystem. And over the last couple of years, we basically added other services to our portfolio, mostly in the area of how to streamline payments using stablecoins, how to do tokenization, how to access DeFi, and so on. So it is like a pretty robust infrastructure and a set of products on our platform that help people to manage their digital assets in a secure and simple way. That's kind of like the basics of what we do. We currently work with about 1,800 clients in this space, and help them right now, actually, this year, to work and transfer over this year on a run rate of $1 trillion per year.
That's awesome. And that kind of highlights the unique vantage point that you have at Fireblocks for understanding what's going on in the world of digital assets because you work with so many of the largest institutions in the world. And you touched on this a little bit, but can you share a little bit of how the needs of your customers have evolved over the last 2 years? And are there any themes that stand out to you? The product portfolio for Fireblocks has been growing, and I imagine that's a bit of a representation of the needs of that are evolving.
Yeah, so that's, I think, an amazing question. Maybe kind of goes back. I think your previous question was really around how we founded Fireblocks, and I guess what was I think our journey is kind of entangled in the entire journey of this space, and almost every year we need to. I wouldn't say reinvent ourselves from an infrastructure from the basics of the infrastructure standpoint, but we do need to make sure that we address the trends and the needs that are happening in the space. So when we started the company, and I think that was true to kind of the earlier cycles or the early cycle of 2018, 2022, the requirements really emerged around trading crypto, trading the bear assets or the base assets, depends how you call it. So whether it was like Bitcoin, Ethereum, to a lot of the other tokens, whether those were ERC tokens or new L1 protocols like Solana and so on that were coming in, and that trend evolved from working with I would say the OTC desks and the market makers, and powering a lot of the different exchanges and fintech apps that were coming online or were active in the space and had to scale. So whether those kind of crypto focused players like Luno and Yellow Card in Africa, or Revolut and Robinhood, and some of those people in kind of Europe and the United States, or a lot of players in APAC. Then I would say it evolved to help and allow access to DeFi, and that was clearly something that was very powerful somewhere around 2021, 2022. And then clearly the crypto winter hit. One of the things that we are the most excited about is the fact that over time, it's clear that the technology is being used to do much more than just working with or say investing in digital assets, right? Or investing in the protocols themselves, but rather actually using the underlying technology and using the underlying rails to transform or to replatform either traditional financial activity, and that's mostly around payments and capital markets, and other sort of banking related activities. I'll touch on that in a second. And the other area is really new internet experiences in the form of Web3. So just going on to the first topic, we basically were seeing over the last couple of years push to use stablecoin as the primary mean of um, moving payments around the globe, and this happening across various really inefficient corridors or areas where it's really hard to access good banking and cheap banking, or there is a lot of corridors where that you need businesses to businesses or businesses to consumers or consumer to consumers, retail to retail, and all kind of remittances, right? So basically, the entire corridors around Europe and Africa, the U.S. Africa, Europe and U.S. to LATAM and APAC. It's a lot of use cases around moving money on those corridors using stable coins, primarily USDT and USDC. That's kind of one use case that we see very powerful right now. And we're seeing demand picking up around tokenization. So in that form, I think the easiest way to look at it is that stablecoin itself, they are a tokenized asset. And given the fact that we now have a lot of stablecoins in circulation, I think around 150 billion or so, people want to start figuring out how to generate yield. So of course, like there is one option to go and generate yield using DeFi, but there is also the ability to generate yield using more traditional instruments like money market funds and fixed income. And we're now seeing those instruments being tokenized, and then the interaction between stable coins and those instruments is quite simple. So that is something we are seeing right now. And then of course there are other assets over there where it's happening. So with that regard, we clearly had to evolve our portfolio, and that I think we've been doing quite successfully in providing our payment engine and tokenization engine, and those two things we've been quite successful in terms of addressing those new areas in the market.
Yeah, I think that's a great overview, and it also kind of explains how custody and the secure custodying of your assets, but also moving them around is fundamental to everything that you can do in terms of digital assets. Maybe diving a little bit deeper into the world of tokenization. Obviously, one of the big pieces of news recently here has been the approval of the Bitcoin ETF, and now there's a lot of chatter right now, at least in the US, about the approval potentially of an Ethereum ETF. I'm curious, in your view, why are Bitcoin ETFs important, and how has it impacted the dialogue around tokenized assets generally with your customers?
Yeah, I think it's a good question, to be honest. Um, so I think it is clear why Bitcoin ETF is important for inflows or the investment thesis in Bitcoin, right? And why it is an indicator to price increase of Bitcoin, and that's solely because um, Bitcoin or an ETF wrapper for Bitcoin investment just makes it more accessible to traditional capital market investors that it was more difficult for them or impossible or more complex to try and invest in Bitcoin. And to be quite honest, this is mostly a combination of a regulatory and knowledge gaps, right? That prevented those users to um, um, regulatory compliance, procedural gaps, and knowledge gaps that prevented those players to invest in Bitcoin because in most of those cases, yes, they could have opened an account with a brokerage or with a custodian in the US and so on, and figure out how to do it themselves, right? So that is the reason why it is important. And of course, then prices are increasing. It's generally speaking good for the economy, for the crypto and digital assets economy. It creates a lot of momentum around investments in other topics. It makes people more familiar with the asset class, and then people kind of going down the rabbit hole and they are exploring other use cases. And it just I think more specifically in the US, it does create the legitimacy that is needed on the regulatory side to assume that the regulators are leaning forward in approving other things that are related to the crypto rails. Now, my personal belief, and that's like my personal belief, in that case, I even don't represent the view of Fireblocks, is that, of course, if you really want to invest in Bitcoin for its properties, you probably should be investing directly. You should be probably investing through some form of or holding it in some form of self or direct custody, technology, because when you read the white paper, you kind of understand why, and you build your narrative of why Bitcoin is important. It is important because of the properties that allow it to be disconnected from outside control, and therefore you need to probably assume the control and treat it some kind of like insurance instrument or something like that. So that's just my personal belief, but I think from an ecosystem point, of course, that providing more options to invest in Bitcoin is a good thing. I think as it relates to tokenization specifically, the powerful momentum that was created over there is that a lot of those asset managers in the US are the ones that are opening or the ones that are launched the ETF that created a pretty successful business case for them and kind of up on the appetite to do more things. And what we've been seeing quite rapidly is that, for example, BlackRock, once they launched the ETF, they also went in and they launched tokenized money market fund with Securitize. We are powering parts of it on the back end. And I think we're going to see more and more of that.
Yeah, I think that resonates a lot, especially, we've even heard here in Silicon Valley of tech companies actually starting to diversify some of their treasuries. And historically, it's been very difficult for them to think of digital assets as a part of that diversification strategy because operationally it was too complex. It was something, that feels as trivial as at the end of the year, we need to do an audit. And if we hold literally Bitcoin, it's very difficult for us to do that. But with an ETF that streamlines the process quite a bit. And little by little, a lot of these companies and these firms start to get familiar with what it means to be a participant in digital assets. So that resonates a lot. One of the other areas that you touched on that is also growing very rapidly is using digital assets for international payments. And stablecoins have been around for a few years now, but the payments use case really seems to be taking off now. Do you have a view on why now is the right time or the right moment for these international payments to be taking off versus before?
Um, yes and no. I think actually that at least from what we are seeing from the data is that it's a linear growth. So it didn't start now. It actually we have quite a few stablecoin remittance or stablecoin stablecoin payment operators on the platform that are crypto native, and they were like focusing on that use case from the inception of their company. There was a point in time, I believe somewhere in 2020, 2021, that the early movers in this space sort of came in and started doing it. And actually, like, when we look at their data, you just see basically it's like linear or exponential growth, right, through the last couple of years, but they were not susceptible to some of the cutoffs that happened in 2020 in the core crypto market. So it's kind of up into like all those charts, when you look at the activity of those companies, are up and to the right. I think that what's happening right now when crypto recovered, especially on the back of the reputational issue that happened post FTX collapse, is that we have a lot, like we have combination of two things. A lot more players are jumping into this game, right, and offering services over there. And then also a lot of traditional counterparties becoming more comfortable in being part of that ecosystem. And that combination is basically what creates or reinforces the momentum, right? Because one thing that I think people don't realize from the outside about maybe like payments in general, irregardless of crypto, but it's definitely true for stable coins, is how powerful the network effects are in that space, right? So it's kind of like, goes probably to the very basics of what is money, right? And then you're basically saying, okay, so stablecoin is just basically a new representation of money, and therefore it is really operating according to all the laws of network effects, where things just accelerating exponentially as more and more participants are coming in, right? So kind of when you start adding those nodes really quickly, it is actually not growing linear in a linear way. It's growing in an exponential or just like quadruple way, and that's, I think, what we are seeing right now. Now, of course, the fact that also on a regulatory standpoint, we see quite of the most prominent regulators, whether this is like Japan, Singapore, UAE, Europe with MiCA. We have like reasonable understanding in Brazil around it. I think, in Hong Kong, we see basically all those regulators coming in and allowing this activity as part of the different licenses that they are able to issue. That reinforces the ability of new players or existing players and banking partners and so to service that market, and it picks up. There's also the component of yeah, they're just like, more firms that are offering those services with better UX, so consumers are able to access it.
Yeah. That resonates a lot, and I think it's to your point. I think a combination of multiple things that are coming together that really is making this even easier to use, more culturally acceptable to use. Um, in your view, what are the remaining bottlenecks that are preventing even more institutions from adopting digital assets? And can you share a little bit about how Fireblocks is helping to address that, specifically
Yeah.
for payments?
Yeah, so the honest answer is probably the biggest hurdle that we still need to cross is or resolve is US regulation. And the problem over there is that without clarity in the US, that might come through in the next 9, 12 months, I think being realistic, right, is through the stable coal bill of the or the FT21 is the fact that we currently don't have a good view on how this is treated in the US. And that effectively creates a ripple effect where it's really hard to get banking for the stablecoin issuers, and it's very hard to get meaningful banking for on and off ramps for the into stablecoins. So I wouldn't say like, this is specific to Fireblocks, but this is something that once resolved is just probably going to create huge tailwinds for stablecoins. Um, in terms of like, us and what we are doing, we are continue to invest, work with some of the uh, predominant players in the payment space, bringing them into this uh, ecosystem. We have the payment engine capability, which effectively allows them to orchestrate either cross-border transfers. It allows them to do the treasury management around stable coins. It allows them to enable pay-in, so basically spin up systems that allow people to pay and accept stable coins. It allows them to spin offerings that do merchant services, creator economy, and so on. So all those things and automation of that, of course. And those things are from our standpoint, it's really critical to enable them through an infrastructure that is safe, secure, operates at scale, easy to integrate, and really puts them in charge of driving those offerings in a way that is cost-effective, compliant, secure, and we also spending a lot of time in terms of really advising them in terms of how they should be approaching those opportunities.
Makes a lot of sense. Um, Shifting gears a little bit from institutions, I'd like to touch on Web3 because there's a lot that's happening over there right now as well. Can you share maybe one or two of the areas that you're most excited about in terms of Web3 themes and developments that have happened over the last year and a half?
Yes, I think a lot of super interesting things are happening over there, and I think there's a lot of really great experimentation across how do you use say like NFTs and economy around NFTs to do a few things that are very innovative and in some regards also like groundbreaking in terms of what was not possible beforehand. One of the clear areas that I think evolving is around loyalty initiatives. So as an example, we partnered and we enabled Flipkart to run what they call Fire Drop. It was basically a loyalty program that they ran through their client base. I think gave access to about 3.2 million users that were interacting with that, and it drove a pretty significant GMV across the sellers on their platform in terms of the users were able to get NFTs that were helping them to gain benefits and interact in a more interesting way with the different sellers on the platform. So we're now seeing this across the board. We're seeing this coming from luxury brands, sport brands, museums, So that's kind of interesting. And of course, there are a lot of startups that are doing it. Um, the other area, there's a lot going on in terms of attempts to go after social networks, and which I find quite fascinating, and I think that there is a lot of opportunity over there because you can really create new ways to incentivize users and also to provide royalties on the content that is being generated by the different influencers or creators. And lastly, the area which is almost trivial is really how do you disrupt all the different tickets or ticketing use cases, whether those are for concerts or airlines and so on. Those are the things that we've been, I think, tracking, excited, seeing very strong progress. And I think what is really happening over there is that a lot of the builders are now shifting from focusing on really the technology to focusing on user experience and the consumer experience and how to basically, would say, Web3 at the front, Web3 at the back kind of approach.
Crypto mullet, as they say.
Exactly.
Um, don't see it.
It's like I guess like it's a Web3 mod. Yeah.
It's a Web3 mullet, that's right.
Yeah.
I know we're actually coming up on time, so maybe as a fun one to wrap up, we covered a wide range of topics today, from tokenization to payments to Web3. Is there anything else on the horizon that you find most exciting right now? Maybe an area of research or innovation that you're keeping an eye on?
I think there are a lot of interesting things that are happening on the technology side. I think that there's a lot of discussion around account abstraction, which is close to our heart. And I think that some of the new proposals that hopefully are going to come to a consensus and actually hit in a native way and next year. This is exciting. Personally and conceptually, I think that I would like to see how this technology really addresses some of the challenges in the private credit space that I think we haven't actually cracked yet. And I also think that there are interesting opportunities in the kind of combined or overlapping space of the financial assets and the Web3 experiences. So this is one of I think we're all kind of thinking about, how do we tokenize things or how do we create the tickets? And it's all just basically improvements of traditional systems. But there is probably like an opportunity here to create something that is completely new that wasn't really um, uh, offered through the traditional technology. And that might be a breakthrough. And I think that there is something there.
Yeah, I think all of those areas are super exciting. Well, I think we're up on time. So Michael, thank you for sharing all of your wisdom and insights. I really enjoyed it, and hope we can do this again.
Yeah, Chris, thanks so much for doing this and for the team inviting us to chat here.